Hello, everyone, and welcome to this episode of 22 Minutes. I am Jason Bates, and I'm going to bring you the lender side of things, and he is Stephen Cotton. He's going to bring us the realtor side of things as he adjusts his camera there. Good job.
Thanks. I only had 10 minutes to do that. Why not do that 10 minutes ago?
Exactly. We hope to not only entertain you, but also bring you some valuable content that you can actually, truly use, literally use, as Stefan would say, when you're looking to. I know he would never. That's a little inside joke there. He would never use that. But if you're looking to buy, sell, refinance, or invest in property, especially in the Phoenix metropolitan area, we want to be your team of choice. This show is all about real estate, so if you're a first-time watcher, we do appreciate you spending time with us here this morning. We do this Monday through Friday at 9 a.m. If you're over on Facebook, watching us on Facebook, please head over to our Facebook page at 22 Mins is the name of the Facebook page, and be sure and like that page. That way you can stay up to date anytime we go live, which would be awesome, right? Keeping you in the know. What's that NBC? The more you know.
Oh, I was going to say G.I. Joe.
Oh, is it G.I. Joe?
Now you know, and knowing it's half the battle. G.I. Joe.
There it is. Okay, from the 70s, right? 80s? Yep. Okay, hey, we always do a tweet quote of the day. We got a lot of questions here. These are questions that if you're looking to do that, buy, sell, refinance, or invest in property, these are questions you need to be asking your lender and your realtor. So don't be bashful when asking these questions. So we got a lot of questions we want to, propose to you and why you should be asking these questions. So, but first, we always do a tweet quote of the day. So let's get right to that. All right, today's tweet quote of the day, Austin Kleon. I don't know how to pronounce that. Klingon. Cleon. You don't want to look like your heroes. You want to see like your heroes. So look at it from a hero's perspective. Okay. See the good in people, I guess. Right? That's kind of how I took it. I don't know. How do you take that one?
Well, you don't want to wear a cape. Is what I'm. First off, you don't want to wear a cape.
Yeah.
But you want to help people that in need.
Yeah, you don't want to wear tights at Comic-Con.
You don't want to talk like this and say, I'm Batman. Right.
Who's Batman? I'm Batman.
Hey, how can I help you buy our house?
Oh, man, that's funny. All right. Hey, let's do the transition. Let's get into these questions here. I'm going to ask a question or throw a question. You ask a question, and we'll go from there.
You have all the questions, so I
do? You got all the answers, and I got all the questions? Is that how it works?
I got half the. Yeah, we'll figure it out. Just shoot from the hip.
All right. All right. Uh-oh. Wrong music.
Oh.
Wrong music. Let's hit pause on that. There we go. That was our military. Yeah. Tribute to our military personnel out there. Okay, so first question. I kind of broke down here on the lender side of things. There's questions that you should be asking your lender. There's additional questions for lenders. There's questions for mortgage brokers, and there's questions about your loan, right? So there's a little different categories there that I want to cover. First question, though, are you licensed by the state, your state? There are a lot of lenders who do loans across the United States.
Yes.
So now this question is kind of a generic question because you really can't even talk about rates unless you're licensed. But there are teams out there who have kind of robo-callers that call for, I guess automatic dialer kind of people or whatever. And so you want to actually talk to the person who knows the interest rates, who's licensed in that state, who knows the laws within that state. So make sure that they're licensed.
So the simple question is, are you licensed?
Are you licensed by the state? Yes, that's the simple question.
Okay, Jason, are you licensed in Arizona?
I am.
You can give rate.
Yes, I can negotiate rates or quote rates. A processor cannot quote rates. So don't ask a processor if you're in the loan process. Don't ask the processor to quote you the interest rate. Not going to happen.
Jason,
Yeah, call the lender. Call the lender. So that's a question here. Another one. I don't know if you want me to ask too. You want to go for the next one, or do you want me?
Let's say, because we've talked about the show last week or the week before, where realtors were kind of saying what the rates were, and realtors aren't licensed.
No.
In that sense, realtors are licensed to sell real estate, but they're not licensed to give quotes for numbers. So, if your realtor is giving you a interest rate quote, a simple question would be, are you licensed to give me that quote? But
exactly.
Or how did you hear that number? Because at the end of the day, the realtor should not be saying these numbers, but a licensed professional.
It's a little gray area, right? Because I mean, you see, there's rates that are quoted on the internet, that sort of thing. Yeah. So, hey, that's the rate I've seen. You can quote a rate without being licensed because it's on the internet. You can't negotiate the rate. You can't say, okay, well, if you do this, then your rate is this. If your credit score is this, then your rate is that. You cannot do. Okay. So it's a little bit of a gray area, I suppose. But realtors in no way, shape, or form should be quoting rates. They just shouldn't.
We got a little bit in trouble. I didn't do it, but somebody on my team was kind of showing somebody what the payment would be at whatever rate. Well, it was a down payment assistance, so the rate's higher, because it's 0% down, so there's a higher rate. So it overcame the rate that he was already quoting, plus the client only wanted to spend $1,100 a month or something, and it got up to $1,250 really quick.
Right.
So it's interesting. Interesting what a realtor can do to ruin people's expectations sometimes.
It can happen very quickly. Okay, so now let's get on to a realtor question, and then we'll jump back to a lender question. Can I have a CMA for the area?
No. Just kidding. Yes.
All right, so explain a CMA. What is a CMA?
Well, CMA is 3 letters, the short version for comps, which is funny because comps is short, Earth and CMA. CMA stands for comparative market analysis.
Correct.
Most realtors will press the RPR button. There's an RPR report that generates what your CMA is worth. It takes them about 2 seconds to create this. I go a little deeper. I run my own and I compare it to the RPR because the RPR report is strong and gives you a good range. I think it does like a 20K range. I try to see, I dive into what's sold in the last 3 to 6 months. And if it's single level, it's single level. If you have a golf course view, the other ones have to have a golf course view, or we have to adjust accordingly. But at any moment, you want to know what this house is worth, whether you're selling or whether we're putting an offer on a property. I will run a CMA and give you a range of what I think it might, the top that it might appraise for and the bottom that it might appraise for.
Nice.
I like how the close-up came right when I was summing it up. We got that drum beat again?
I know, right? I'm going to turn that off. All right. Okay, so cost market analysis. That's very useful, especially if you're selling your house and the realtor says, I can sell your house for X amount of dollars. Yep. Well, how are you arriving at that number, right? Can I see a cost market analysis?
We did a listing appointment for somebody not too far away from here, and we came in and said, your house will be appraised between 340, 350-ish. And they said, well, the other realtor we had said it would sell for about 365. And I said, well, that's because that other realtor doesn't know how to do comparables. So, because they looked at this house that was on the golf course that sold for 365. So I can pick this one and say, here's what I can sell your house for. And it sounds really easy. And it sounds like it's a better deal. But your house isn't on the golf course. So what's going to happen if I bring you a buyer at 360 and it doesn't appraise but for 345 or 350? What's our plan then? Right.
Exactly. Okay. So next question here. Let's jump back to the lender here. This one, I don't know.
Read the question out loud. Then you can
okay. How do you get paid? How do you get paid?
Jason, how do you get paid as a lender?
Yeah. So how do I get paid as a lender? Well, lenders now with the Dodd-Frank Financial Reform Act get paid on the volume that they do. Used to be they would get paid on the actual individual loan, which it kind of is the same way. You're paid on volume, but it would be paid on how much that lender charged you and how much they could charge as far as an interest rate goes. They would get a kickback on the interest rate. Today's environment, there are no kickbacks on interest rates. Lenders are paid on the actual volume that they do. So similarly to how you get paid. You get paid on the sale of the house or the purchase, right? Representing the buyer of the house.
You have so many people in your team, Jason, right? You have a processor,
yeah,
underwriter,
yeah,
and you. I guess there's not so many people, but you have three. I don't know if there's more people.
Well,
right?
an assistant too. I have a loan officer assistant too.
Okay, right. So okay.
Yeah.
So all these employees, they're paid hourly.
Yes. Yes.
Okay, and they are paid because they just work the clock and they stop at 5 and they see you tomorrow. We'll finish the loan tomorrow.
Yeah, I guess kind of.
Right. So, right.
They
so
have their
loan,
metal lunch pail that they bring in too, Stefan.
Right. Good morning, George. Good morning. Good morning, Sam. All right, let's start underwriting.
Right.
With a pencil in the ear, and here you go. They're hourly. You're the only one that gets paid volume or by the transactions itself. And from your transactions, you have to pay out these other people, correct?
Well, not really. The company. So in Arizona, we are paid a W-2. Loan officers are paid an hourly rate of pay too, $10 an hour typically, minimum wage, right? And then we're paid a draw, or we're paid that as a draw on our commission. So as we close loans and the volume that we do, we're paid a percentage of that volume. Some are tiered, some are not tiered, but we're paid a percentage of that volume. And then that draw or that hourly rate is taken from that commission, if you will. Now,
Gotcha.
not all loan officers are paid that way. Some are paid a salary, and then they're paid a smaller commission based on volume.
Like
Quicken Loans, Bank of America, these bigger banks typically will pay a salary, and then they'll pay a smaller, commission on the volume. Myself, I'm paid a higher commission because I'm 100% commission. We just have to satisfy Arizona state law by paying me a W-2 or paying the loan officer a W-2. Other states aren't like that. Like in California, I think they're paid a 1099 kind of deal. They don't have to be paid an hourly wage, but in Arizona, we do. So I guess the bottom line here is that the consumer is not the, I don't want to say beneficiary, but the exact opposite. They're not the ones who are actually paying the loan officer through the interest rate. Before Dodd-Frank, there was a huge incentive to loan officers to charge a higher interest rate because they would get paid more. Right. And they would justify that by saying, hey, your credit's not very good, therefore your interest rate's higher, way higher, and they get paid more. Now, that doesn't mean when your credit's not good that you don't have a higher interest rate, because there's risk involved with lending to somebody who has a lower FICO score. So your rate is going to be higher, but it's not directly tied to the profit for the loan officer. Cannot be that way. Okay? So that's important, though. That's important to note, because you want to make sure that your lender is not, first of all, they should answer that for you. If they stutter and don't answer that question, how they get paid, might be a little fishy. Fishy. Okay, so now let's jump over to a real estate question. There we go. All right, next one. Do you work solo or part of a team?
I work
or as part of a team.
Yeah, I work as part of a team.
Okay. Why is that good? Good, bad? Tell me the good, bad, the other.
In kind of the same vein that I said, you have an underwriter and a processor and stuff. If it was just me, I would probably be able to handle maybe 5 transactions a month and then be overwhelmed, and I wouldn't be able to give you full proper service. But if I have a team, which I do, I have a director of operations. I have showing agents. I have buyer's agents. I have a transaction coordinator. The transaction coordinator handles the file. The director of operations handles the transaction coordinator handles the transaction, not just the paperwork. And then the director of operations handles the stuff that happens before and after the transaction as a client thing. And then the buyer's agents show the houses. The showing agents show the houses. I sit here and reap all the benefits. No, my job is to put out fires. It's like any transaction, it'll have probably 3 to 5 fires that happen. And with the team, we try to preface trying to get out there and putting out the fires before they start. But with the team, it's a little bit more efficient. We know what to do. We have systems in place to make sure that we don't miss any thing that might potentially go wrong.
All right. All right, good.
Is that a long answer, short answer? I don't know.
No, it's a good answer. It's the answer. It is what it is, right? Some people hate that saying, but I say it all the time.
So the other thing is, so ask your guy if he's on a team. I am the team leader. That's why I have a show, right? But
Yeah.
right, yeah, right. Anybody's right. It's so big, such a popular show. But if you ask your agent if he's part or he or she is part of a team, and the answer is no, that's not necessarily a bad thing.
Right.
But you want to ask them, do you have a team in place? Like who does your paperwork? If they're doing the paperwork too, meaning because after you get the contract, you have to go scan it, divide it, put this thing up, and that's just for me, that's a big waste of my time and your time too as a client. You'd rather have me putting out the fires that are needing to be put out. You don't know unless you bought a house. You don't know that there's a lot of fires, and those out there that have bought in a house before know a lot of things happen along the way. So
Yeah.
we have a lot of experience with our team to put out these fires. But if you have an agent that doesn't have a team, you might want to ask them, well, how long you've been in the business? How many transactions did you do the last 12 months? Type of stuff. Just get an idea. If they don't have a team, how efficient they are by doing it by themselves.
Exactly. Good answer. Good answer.
All right.
Okay. So next one here. What is everybody's concerned about rate, right? So you want to ask your lender, what is the par, like the game of golf? What is the par rate for?
What is the par rate?
Yeah, what is the par rate? So what is a par rate, right? So par, think of it the game of golf, or if you're a construction worker or whatever, think of it like as a tape measure. Okay, so you have inch number 2 as an example. Okay, that is the par interest rate. If you go down to inch number 1 on that tape measure, you're going down. Therefore, it costs you money or discount. You have to discount the 2 inch to get down to the 1 inch. Therefore, there's a cost associated with that. Okay, and if you go up to 3 inches instead of the 2 inch on the tape measure, that is a credit. Okay, so then at that point, that money would be then credited back to you. Okay, so if the interest rate is, say, 4% and the par interest rate is 4%, at 4.25%, you may get 1 point back as a rule of thumb. 0.25% equals about 1 point in credit. And vice versa, if you want to get down to 3.75 as your interest rate, well, then it will cost you 1 point in discount to get down to that rate.
If I was a buyer and I was buying a home, conventional loan.
Yeah.
Typical loan cost. Here's what I say. FHA typical loan costs are 3%.
Yeah.
Conventional and VA are about 2%.
Depending on the sales price, but yeah.
Cash is 1%. Right. Well,
yeah.
Average 250 is what we're at in the value.
Yeah.
So 3, 2, 1. So if I'm conventional or VA, that's 2%. I get confused. Which program am I talking about? But if I have a conventional and I wanted to have my closing costs covered, you're saying that maybe increases by half a percentage would cover 2 points of the loan?
Yes. Not always, depending on the market and what's happening in the market, but as a rule of thumb, 1/4 of an interest rate is equivalent to 1 percentage point in credit or discount.
So if I buy a house for $250, which is the example I was trying to give, the 2% is roughly about $5,000. That's everything. That's the title. That's the loan.
Well, if $250 is your loan amount, yes. So because it's based on loan amount, not sales price, so a little different there.
Right.
But
because you're going to put 10% down or 5% down, right? So the purchase price is like $265, but the loan amount is $250.
Yeah.
So then I have $5,000. I want to cover those costs. I can ask the seller to cover it, or 2, I can increase my rate just a little bit and have the lender have it covered in my loan costs, so I can get the house. And so when I'm competing against these other buyers that are not asking for closing costs, I actually have a fighting chance, even though I need these closing costs covered.
It's a tool that's not utilized enough, really, because everybody's striving to get the best interest rate. There's a lot of pressure on interest rates right now, right? But it's an effective tool to get in a competitive market to get your offer accepted over others. You may have a little bit higher interest rate, which may equate to $20 a month or thereabouts, depending on sales price and loan amount. But your offer then comes in much cleaner. And your closing costs are covered. You may hear these advertisings on the radio, on TV. Hey, no closing cost loan. It's a no-brainer, blah, blah. Let me squash that. There's always closing costs. It's just a matter of who's paying for them. And when a lender says, hey, I'll pay all your closing costs, that should immediately tell you as a consumer that you could get a better interest rate if you paid your own closing costs.
Right. For me, the less money I put out of pocket for the purchase of the house, the cleaner the offer.
Yeah.
The cleaner the offer gets you accepted. So whether you're spending an extra $40 a month because you had all your closing costs covered by the lender, or you missed out on the house because you asked the seller to cover these costs and they went with somebody that didn't ask for it, that's the biggest decision you have to make as a consumer, I would think.
Yeah. Don't be so dependent. And when I talk to clients, I give them this option, right? You can have Stefan and his team negotiate the sales price of that home and get the seller to pay your closing costs, or you could bring that sales price down a little bit, right? And I pay your closing costs for you. Right. So it's kind of a little bit of it. There's a little seesaw that can happen there. So just depends on the situation, how motivated the seller is, how good the agent is too, and their negotiating skills to make that happen. So there's options there. It's not all about, hey, the sales price is $250. You're going to ask for 3% seller concession, so let's raise it to $257 or whatever it is.
Right.
And then the seller will still net the same amount. You get what you want. He gets what he wants. We're all good. Well,
that used to be the thing. That used to be the thing like 2 years ago. But now the home might not appraise because we're already pushing the market. So if I had a $250 offer and a $257 offer that asked for closing costs and a $250 offer that didn't, I would encourage the seller to take the one that's cleaner, because we don't know if it's going to appraise at $257, but we're confident it'll appraise at $250.
Yep. There you go. Options, man. We're all about options.
And we're all out of time.
We're out of time. So I know we didn't get to I got a ton more questions, right? I mean, look at all these. I know you can't really see them, but I got a ton more questions. We've got all the answers to all the questions. So if you're looking to buy, sell, refinance property, hey, reach out to us. Don't be bashful. We won't hurt. We don't bite. Reach out to us. We'd love to represent you. We love what we do. This is what we do full time. We're not part time. This is what we do and who we are. So please reach out to us if you're looking to buy, sell, refinance, or invest in property. Or if you know of anybody who's looking to do those things, reach out to us. Either way. Hey, if you watched the entire show, thank you for sticking with us and allowing us to be a part of your day. We do this Monday through Friday, as I said earlier, at 9 a.m. Arizona time. So head over to our Facebook page, like the page. You'll get notified when we're live. That way you can watch us live. You can always watch the replay on YouTube. And if you're over on YouTube, give us that thumbs up and subscribe to our channel. That would be awesome. With that, I think we'll wrap it up. We are over time. We try to keep it at 22 minutes, but we always go over. I don't know what the deal is there. But anyway,
everyone should change it to 4 minutes and then see what happens.
Yeah, 24 minutes, exactly. All right, everyone, have a great day. We'll see you tomorrow. Take care.